But Shibani, hold that thought there. You did talk about, large private banks is something that you continue to prefer. But when we consider this large financials basket, and what have we seen in 2024 is how the wealth creators, the capital markets related stocks, the AMCs at large have actually continued to chug along higher. Of course, whether the markets were extremely volatile, we've actually seen the SIP flows continue to soar at record high levels. So there is this continuous inflow of money that AMCs, wealth creators have to continue to manage. And there is no denying the fact that the markets have only just begun starting interesting, large part of our population, and it's only going to grow with the demat accounts rising now. How would you approach this space? Do you think this space now has to be a core part of the portfolio of retail investors? One has to really look at this part as well.
Yes, so absolutely. So this segment, and as you rightly pointed out, when you look at the entire financial services sector as a whole, the sector has become extremely broad and has become diversified with the listing of new companies across segments. And of course, the capital market plays are now become a large part of the sector, whether it be wealth management firms, asset management, broking firms, exchanges, etc. So if you look at the space on the capital market side, at this point in time, we believe that some of the wealth management plays as well as asset management plays are well placed. We are structurally positive on them. In pockets, of course, some of these names have seen significant up move and have outperformed, and therefore one has to be cognizant of valuation when we are looking at this space. But having said that, today, as you were rightly pointed out, penetration level in terms of equity in the overall basket of financial investments still remains fairly small, and therefore there is a long runway for growth. And from that perspective, our long-term view and thesis remains fairly intact. What we have also seen is that if you look at the focus on profitability, the share shift in terms of mix, specifically when it comes to some of the asset management plays towards equity, has helped in terms of improvement in profitability over the last couple of years. And some of that valuation re-rating is on the back of actual improvement in earnings and profitability. And this is something that we believe will continue. However, at the same time, there is also another factor that is taking place. There is some degree of consolidation of market share. Some of the larger players are growing larger, and therefore they benefit from size and scale in that extent. And we should be cognizant of that when we are evaluating the industry. In the near term, if markets are volatile, and we do see some volatility where this capital market segment, specifically with the AMC or the wealth managers are concerned, these companies may also experience volatility because they are clearly linked to capital markets. But then, given that the structural thesis is intact, we will possibly look at volatility as an opportunity to increase some exposure in some of these pockets and sectors.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.